See if this catches anything here.
Hmm?
See if this catches. Catch. So we're good. It's no longer in here. Welcome back to Investing with Confidence. I am your host, Joshua David. We are always having a good time and having a fun time, especially here today, talking about the financial markets and how us, as the average investor, can make better investing decisions. If you happen to miss 2 tickets for the investing class, call 952-814-4410. That's 952-814-4410. With inflation really showing its face here now, it kind of impacted the markets this week. And there's been a lot of talk on how inflation isn't a problem. But if you look at the numbers, if you look at the price of anything, everything is going up right now. And that was part of the cause of that drop on Monday, Tuesday, Wednesday.
Sure.
Now, we had some different news that came out Thursday, Friday, which actually wasn't really that great, but the market soared back. Why is that happening? But what's going on where us as the average investor can take that emotion away and make those decisions without it?
Yeah, and that is really key is controlling emotions. But when you talk about inflation impacts different parts of the market differently. Typically, when we have high inflation, the technology stocks, the big growth stocks, they don't do as well. Other stocks, other sectors like the financials, energy, they typically do better in a high inflationary period. So one of the important things is to understand the market cycles, the economic cycles, and understand which might be better places to be positioned during different parts of those cycles. But you know what? It really gets down to this. When we work with our students, Josh, what we want to do is start by talking about some of the mistakes and the challenges that they're faced with and that they make as the public. And let's be honest, the public is typically, well they're amateurs compared to pros, because you're either trading with them or you're trading against them. You're either trading with the pros or you're trading with the amateurs. So, and one of the problems there, one of the reasons that happens, because the smart money is not making those same mistakes. The reason that it happens to the public is that they let emotions dictate their decisions, especially when we have these high volatile markets like we're having. And the second mistake that they make is not using and having a confidence in a process that's simple, repeatable, and proven. The way that you do all those things is to have a plan that incorporates them, and you can't just tell your emotions to stay out of this. You can't tell your brain and your gut, hey, you're staying home today.
Are you sure?
See you later. Try it and see what happens. But those emotions are going to get involved in the decisions that you make. You have to somehow control them. That's what a plan does. A proper plan has a set of rules that you follow. It's a step-by-step process that really makes this more methodical. It makes it objective. And who also agrees with that? Because it's not just us saying that. Warren Buffett has said, this is a quote, stay objective. Detach yourself temperamentally from the crowd. In other words, what he's saying is control emotions. Then that plan should also include a strategy that you use regardless of what you're trading, regardless of whether it's in the financials or the technology or whether it's stock or options or futures or Forex. It's a step-by-step process that includes a set of rules that you follow for each of those, but it's the same set of rules. That's what helps make it simple. And then what makes it repeatable is that we're looking at something that happens on a daily basis. That's activity by the big institutions, by the pros. And as long as those guys are trading, which they do every day, they're providing opportunities for us. And there are different things that you use in different market conditions. We're seeing different market conditions now than we saw maybe 5 or 10 years ago or 20 years ago. So some of the things that were maybe working years ago may not be working now. They may not be appropriate at this particular time.
Let's talk about that for a second, because a lot of people read books.
They do.
They go on YouTube and they see strategies and techniques that were published many, many years ago.
Right.
That's why it's important to have a strategy that evolves with the market. The market changes we're seeing changes every day.
Sure.
So you have to have that strategy. Talk a little bit more about that core strategy and how that's designed to follow the smart money.
Right. Well, with all of the different things that are out there, there's one thing that is constant, and that's really what you want to rely on. The name of the show is Investing with Confidence. You want to do as much as you can to increase your confidence and knowing that you have the greatest probability of being successful. Nothing is going to be guaranteed. The best that you can do is put the odds in your favor, and to increase the potential that you're going to benefit from whatever the market is presenting. And the market not only is different in kind of the components of what might be working, but it's also different in the directions that it goes. We saw this last week, Josh. The beginning part of the week, the market was down. And Thursday and Friday, we had two huge up days. So the market goes different directions, and most people are only really educated, if you want to call it that, but they're only exposed to strategies and assets that will benefit them if the market only goes in one direction, and that is up. That's not what the smart money is doing. Do you think that companies like Goldman Sachs or people like Warren Buffett just benefit when the market's going up, and when it's going down, they just sit there and they have a high level of stress, and they're just hoping and praying that things turn around? No, they don't care which direction the market goes. They have strategies that they use. And by the way, they're the same strategies that we as the public can use. We can do basically the same things that they're doing, but the important thing is to be able to do it when they're doing it. In other words, follow them, follow the things that they're telegraphing to us that we can read in a price chart. And that's what we do with our students, is show them how to read that price chart so they can see where the institutions are trading.
Yeah.
They can see when they're getting in or getting out of something.
You're exactly right. The reason they're able to do that without emotion is because Al is talking about they actually have a plan.
Sure.
The big banks, the smart money, they don't trade and invest like the public emotions. They do have that plan. That's why it's important to trade like them. Follow the smart money. It's kind of like jumping on their coattails and riding along with them, where that saying, if you can't beat them, join them. But you have to have a strategy that follows what the market does. The markets change. It's almost daily. So that core strategy that our sponsor, Online Trading Academy, is designed to teach you to make investing decisions that follow the market and what that market is actually doing today. If you want to learn more about that core strategy, Al teaches investing classes and gets into more detail on those strategies and techniques that the smart money is using. But he talks a lot about, Al was talking about common mistakes that the investors make. He talks about those mistakes, brings them to light, but how to minimize them, but also our step-by-step rules-based strategy for trading any asset in any markets. Callers 1 through 10, I want to invite you to this investing class. We do it on the week. We also do these on the weekend as well. You can receive 2 tickets when you call in, plus the Financial Quick Start Kit. Call 952-814-4410. That's 952-814-4410. Al, you were talking about the smart money. When they're creating moves on these markets, the price chart is what we want to look at and make those decisions based off, because that's telling you exactly what's happening. That does not lie. Fundamental information like news and earnings and any report you can read online creates an opinion. But if you have factual information, that's where those decisions are made, but made with more confidence, because it's it's by facts.
Right.
Talk a little bit more about supply and demand and unfilled orders that we're looking for.
Right. Well, here's the important thing. If you make a trade or you make an investment, you get into something, you want it to do what? You want it to go up in value so you can benefit from it. And if you've been in that trade for a period of time, shouldn't that be one of your goals, is to identify a profit and be able to take that profit?
You would hope so.
Yeah. How do you do that? How can you identify when you get into something that gives you the best opportunity of it succeeding with a high profit potential? How do you identify the proper profit potential? Because a lot of people, when they buy something, they have no idea when they're going to sell it. They just watch it go up and they think it's going to continue going up, so they stay in it. And typically, over time, you stay in it too long and it turns and goes against you, and your emotions don't let you get out of it until you actually have started losing money. You've lost the profit that you had and probably some of the initial investment that you've made. So how do you do that? How can you identify the right price to get into something? On a price chart, you're kind of being told when to do that based on how the institutions move price. You can read that on a price chart, and it really gets down to dollars. It's how much money they have to invest. Goldman Sachs has a lot more money than I do, Josh, and probably than you do.
They may, yeah.
They might. Warren Buffett has more money than we do. So they can put positions where they're buying many millions of shares of something, but they typically cannot do that all at one time because they know here's one of the edges that the big players have. They spend millions, tens of millions of dollars every year on research and data, which helps them to identify the true value of something. And they have the patience to not pay up from that. They don't chase price. They wait until the price is in that level, that area that they want to buy. Well, they're telegraphing that to us in these price charts. Once they start buying, the price will go up. When you have more demand, in other words, in the financial world, more buyers and sellers, price is going to go up. When you have more sellers, more supply of something, price is going to go down. If you can identify where the big buyers are, where their unfilled orders are that are going to become filled, that's where you want to be. That's where you want to be positioned. Then let everybody else come in following you, driving the price up, basically providing a profit for you.
Yeah, and that's supply and demand at its finest. I mean, I was doing a show earlier this week, and I was talking about how that actually works. And if you think about an auctioneer, and if you're watching the show on YouTube right now, I have a cell phone, and if I'm going to sell this phone, I know it's $1,000 phone. I'm going to sell it for, let's just say, $500. Well, everybody knows that it's $1,000 phone. There's gonna be so many buyers for this one phone, so I can naturally increase that price because I have many buyers for this one cell phone. Okay, I'm gonna say $800. Well, okay, now maybe a few less buyers, but there's still more buyers than me, one seller. I can increase the price. Let's say $1,200. Nobody's gonna buy a $1,000 phone for $1,200. So what does price have to do? Price has to go down because there is now more supply than demand. And that's how the financial markets work. The concept is about the same. If you want to learn more about how supply and demand works, Al really dissects this in these investing classes and gives more details on a price chart, which what we're talking about, what that might look like, and how to potentially make decisions based off the facts. So callers 1 through 10, I want to invite you to this investing class. You're going to receive 2 tickets when you call in right now, and I'm going to give away let's go with the retirement planner. That will help you get started right away. Call 952-814-4410. That's 952-814-4410. Coming up next, Al, we have a lot of listeners that want more odds in their favor, but they want to do more with their money, have more bang for their buck. I want to talk about leverage, how to utilize leverage in the financial markets, but also continuing using the stocks with different assets. Once again, for 2 tickets, call 952-814-4410. This is Josh and Al, Investing with Confidence. We will be